Hi everyone, this is Jimmy Allen, founder and CEO of investalytix. Let's get into it. Today I want to talk about something most people are completely getting wrong. If you look online, all you hear is fear, crash calls, bubble warnings, and recession predictions. But actually when you step back and look at the numbers, the story is the opposite. You see, this market isn't slowing down. It's actually strengthening. It's the same way, when a hurricane intensifies and pulls in warm moisture. As Peter Lynch, put it, the trick is to separate the valid worries from the idle worries and then check the worries against the fact. And right now, the fact are rising profits and expanding margins. And that's what, drives long-term stock prices. Let me walk you through what is actually going on underneath the surface. Okay, team. The truth is simple. Stocks follow corporate profit, not emotions, profits. Okay? And this current earnings season, made it very clear. Expectation going in were around 8% growth. Actual result came in about 13.1%. That's a huge jump, and it happened in just a few days. And you don't get, this kind of acceleration in a weak environment. And it wasn't just only tech. Financials were a major upside surprise. And also more than 82% of companies beat estimates on earning and revenue. That's a broad strength, right? Not weakness. So basically profit margins are also, hitting new cycle highs, which tells you that companies aren't just, making more, they're actually keeping more money, right? And rising profits and rising margins together usually mean the bull market still has room to run. Let's go to the next slide. Now, team, this is how I see it. People love to say only a handful of stocks are carrying this market, but that's not true. You see, the equal weight S&P, equal weight NASDAQ, and equal weight Dow are all up this year. To me, that's broad participation, not a market being dragged around by only a few names. Even within the big tech group, the narrative is wrong. You see 6 out of 7 mega cap names backed up their moves with real earnings growth. Only one mostly multiple expansion, and that's Tesla. So the idea that, all of this is just a hype doesn't match the data at all. And then there's sentiment. Surveys are still showing more bears than bulls. Something you normally see during a panic, not during a rising market. And the financial media, they keep leaning into this worst case scenario, even when the data improves. Again, guys, when people are this skeptical while the fundamentals keep strengthening, it usually means the trend isn't anywhere near finish. This market isn't following emotions. Like I said, it's following earnings and margins. Let's go to the next slide. All right, team, let me simplify this. This isn't just a US story. It's global. You see, US companies earning most of the revenue overseas are growing faster than companies focused only on the domestic economy. That tells you what? That tells you global demand is stronger than the headlines suggest. Now, at Federal Reserve, they are preparing to cut rates while the market is sitting just a few percent below all-time highs. Historically, when the Fed cut near the highs, the market has been higher a year later, every single time. To me, team, that's a classic mid-cycle behavior. Inflation pressure are easing, the labor market is cooling, the right way, of course, and sentiment still extremely bearish. When you have a rise in profit, rise in margins, strong global earnings, and everyone still doubting the trend, that usually means the bull market isn't close to finished. All right, team. So when you hear people comparing today to past crises, remember this. The markets don't top when everyone is scared. They usually top when everyone feels safe. Right now, we are nowhere near that point. The data still looks solid and the trend still looks strong. If you found this helpful, give it a like and subscribe to the channel. It really helps us reach out more data-driven investors like you. And head over to investalytix.com to create your free account. Thank you for watching. I'll talk to you soon.